Concerns over slowing economic growth and corporate profits seem pretty widespread. Does our outlook factor in these concerns at all?
You know, Jessica, the punchline to a question like this is the fact that there's the presence of global growth, because one of the great myths that I've seen throughout my career, but was especially true in this correction, was that people would say the narrative is that there's a sharp slowdown in global growth. Maybe we won't have a global recession, but there's a big slowdown, and isn't that bad, and how can stocks go up in spite of that? That's always been a misconception. It's never been true. The degree to which you have growth is actually not correlated at all to the extent to which you have stock market returns. Those things aren't related. The mere presence of positive growth is what matters the most, and it tells you we continue to be in a bull market. When and how the returns come, we take that year by year, and this year we think this is a year in which we get plenty of those returns. But it actually is not very correlated at all on a one-for-one real-time basis to the level of growth you have at any given moment.
Let's extend that to earnings growth as well. Because what's in the media and the headlines here today is this concept of an earnings recession. And it's true if you look at quarterly earnings growth, going into this first quarter, earnings growth is expected to fall and drop into negative territory. And there's some people that are extrapolating that into the second quarter of this year, and there all of a sudden you get this earnings recession, and is that bad? And should you get out of stocks as a result of that? The answer to that is no. I mean, we've got a long history of earnings growth. You've got to go back no further than 2016, the last time earnings growth dipped into negative territory, and that didn't preclude the bull market from continuing. So when you see these scare stories in these headlines about earnings growth falling into negative territory, that doesn't necessarily mean the bull market's over.
Everything's a little volatile. That's just the way life is. But one of the things that's not so volatile is the spread between analyst estimates of earnings and what ends up finally happening. Earnings come in better than analysts forecast they will. And partly that's because businesses like to talk down the future earnings, so then the analysts estimate a lower number, and then business can subsequently exceed those earnings, so they look good. But quarter after quarter after quarter, here's the estimated earnings for all of these companies, and not all of them, but most all of them, 3 quarters or more, end up doing better than estimated. And that process continues unless you get global recession. And in that, while yes, earnings aren't going to be as strongly growing this year as they were last year, which would be nearly impossible, you're still going to get earnings growth, and you're going to get positive surprise. The earnings will be stronger than people think they will. How much? I don't know, but they'll be stronger than people think they will. And we'll continue to see that in each of the sequential quarters as the year progresses. Earnings exceed estimates unless you get global recession.
And the other thing that most people don't appreciate is that in an economic expansion, the economy doesn't grow perfectly straight up. There's volatility as the cycle goes higher. So anytime there's a little blip down, people freak out, not fully appreciating that there is volatility to an economic expansion, and that the key is what's happening with the trend.
And all those little blips that we've had in the last decade as this economy's been expanding, every one of them is rapidly forgotten when you're past it. That is, people forget that this has happened so many times before in this expansion that there's nothing new and different about this.
And for views on current events in the world of investing, visit marketminder.com. Updated daily, it offers on-demand access to Fisher Investment's most current thoughts on capital markets and the global economy, as well as our sometimes irreverent commentary. We hope you will enjoy it.